40 cents times 1,000, which is 400 ringgit. Accounting period by 31st December 2019, you got 1,000 mark, get ready for sale. Get ready for sale. And you are going to sell it at 75 cents, but I don't follow 75 cents. Historical cost concept tell me that all this inventory value at their original cost, or selling price, whichever is lower. Historical cost, 400 ringgit. In the year 2009, the mark not yet sold. The mark not yet sold. There's no revenue. Remember, there's no revenue. Sale is kosong, but the cost is 400. Can you tell me that in the 2009 you lost 400? Cannot. Because why? In the year 2009, your purchases volume is 40 cents times 1,000, which is 400. You have to minus your closing inventory, 40 cents times 1,000 also. So your cost of goods sold becomes zero. That is called matching concept. Think in 2019, cost will be equal to purchases 40 cents times 1,000 marks equal to 400. Okay. In 2009, the cost is equal to 40 cents times 1,000 mark equal to 400. But revenue is equal to 0. So how can you use your cost 400 match with the revenue? So your cost of goods sold will be equal to your purchases 400 minus closing inventory. Less closing inventory 400. That is equal to 0. So now in 2009, the cost of goods sold becomes 0. Am I right? Match with the revenue 0. That's a matching concept. And the duality tells you that you record all your purchases, your payable or your bank account. You prepare the journal entry, duality, double entry. Okay. Consolidation concept, prudent concept tells you that the marks, you make it 40 cents, but selling price is 75 cents. Prudent concept say take the lower figure. Mentality concept tells you that you make 1,000 mark is very significant, you must record it. Realization concept say there's no sales value, no profit realized yet. Objectivity, you got a document to prove that. Substance all form consistency, I will discuss later on in the middle of the semester later on. Okay, now come back to my question. So that is how you discuss the fundamental accounting assumption to be applied in the year 2019. Now, come to 2020. Come to year 2020, 800 mark already sold, 200 still unsold. And you think that is unlikely to sell at 75 cents, but you're able to sell at 30 cents each. Lower value already, am I right? So, now come back to my point here. Separate entities still apply. Going concern, you still carry on, but now until 20th of April. Until 20th of April, the anniversary over already. On the 21st, can you see that? Going concern become no longer applied. From 21st onward, because the celebration fun fair already over. So your marks, who want to buy at 75 cents, now they're able to sell at 30 cents again. Do you know that last year, just for information, you see they sell this UC 50 anniversary t-shirt. Remember or not? Do you heard about that or not? You see they sell the black color t-shirt. Normally I wear it today, I never. Next time I wear, I show it to you. So this t-shirt they sell at 50 ringgit. So you know when I ask the office, why t-shirt so expensive at 50 ringgit? They say because of 50 anniversary. I feel that it's very ridiculous. I never buy. I never buy the T-shirt. So after the 50th anniversary of Thai UC, the T-shirt still got a lot of stock. They offer, I think they put into the intranet. I'm not sure as a student you are being offered or not. If you buy two, the second one 50% discount. That means one is 50 ringgit. So I go and buy two, 75. And my colleague laugh at me, he said, even 275 ringgit also very expensive. I said, never mind, I just support Thai UC. So when the price is 50 ringgit, I never buy. I can see a lot of colleagues, they bought the T-shirt 50 ringgit. So I never buy. Now then after that they offer, buy the first one 50, you must buy two. The second one 50% discount. It must come together. So 75. So this is called going concern no longer apply. So the price go down already to the market value. I don't know now finish selling or not. And I think when the time I bought, there's no more size already. They only got XL. And luckily, you never seen before, Suking quite fat man. So I bought the XL. I think just nice to fit. I asked my colleague I should buy double XL. Okay, so 75 cents each. Selling price now able to sell at 30 cents only. So that's the situation. So you go back to here. Historical cost, going concern tell that the mark is no longer able to sell at 75 cents because the anniversary already over. So going concern may not apply. All the costs you must write down to the net realizable value already. Okay. Same thing also to the Wooden concept consolidism. Money measurement, you can measure very accurate because there are people want to buy at 30 cents. Accounting period now is the 31st December 2020. Historical cost is no longer applied in the year 2020 because based on 40 cents, nobody want to buy. You have to calculate your net realizable value. Realization concept come in. Realization concept come in to tell you that now the mark can be sold for 30 cents only. Clear? And material concept say the 200 mark is still very significant, because you make 1,000, still got 200 not yet sold, 20%. If they left only 2 units, no need to sell. Ask them to send to Suking as a gift. Okay. So if Thai UC make a lot of T-shirt, at the end of the day, they left only 10 T-shirt. Don't sell. Give to me. Yeah, I work so hard. So if they found that the number is not material, then they won't sell already. So but now they make 1,000, they still got 200. The number is still very significant. So material concept say they still have to record this inventory. Okay. And matching concept, you are going to match the 800 unit, which you already sold. So in order to calculate the profit, matching concept, in order to calculate the profit, this one we apply matching concept. Matching concept, we try to calculate the profit determination, which is your revenue. Revenue minus expenses. Expenses means the cost. So in this case, revenue will be 800. Revenue will be 800 times 75 cents. Times 75 cents. Minus your cost will be 800 times 40 cents. So that is matching concept. You got it? So you can get this one is 600, am I right? 600 minus 320. So your profit will be 280. Your profit will be 280. Matching concept tells you that you must calculate your profit 280. You double check, You double check. 75 cents minus 40 cents is a 35 cents each profit. So your 35 times 800. Do you equal to 280 or not? Yes, it's 280, the profit. So it's 280 profit. So your cost is 320. Because I cannot use 400. Even though you bought 400 ringgit, but you still got closing inventory 80. Clear? That is called matching concept in the year 2019. So I don't want to discuss too detail because answer is already given to you here. So bear in mind, accounting assumption is accrual or matching concept. How to differentiate between this accrual or matching concept? Accrual means the marks incurred. 400 incurred. That is called accrual. That is called accrual concept. The matching. Accrual concept tells you that 400 already incurred. Matching concept is more on the income as expenditure to be matched. Okay, to be matched. This is to calculate the profit figure. So in order to differentiate between this accrual and the matching, accrual concept is expenses incurred. You must record it, either pay or not be paid. Okay, inventory not as sold to be deducted. Can you see that? Not as sold to be deducted from the purchases. You got it? Because the marks in 2019 not as sold, you need to deduct it. That is called accrual concept. But matching is more on the profit recognition. So you are reasonably certain that selling of the marks. This one because of going concern. Okay, you are going to sell it in the year 2020. Okay, you are very sure. Then after that, at the end of the 2020, selling price now is 30 cents less than the cost. Less than the cost. So prudence concept come in. You take the lower figure. You take the lower figures. Okay? So that is how you discuss. So you will argue that value the inventory at a lower amount means conflict with the accrual assumption. No. When there's a prudence concept and accrual, prudence should be premium. So subsequently, this is a closing inventory. In 2009, inventory value of 40 cents. 2020 prudent concept say value at 30 cents. Okay, that is what you should discuss. Okay, so I will take a very short break now. Later on, I will continue illustration number 2 on the mathematical concept. Otherwise, you are very confused already. Just now I'm talking about going concern. Remember, going concern. Now I'm talking about accrual. I'm talking about matching. I'm talking about prudence. I'm talking about prudence. Too many already. The next illustration, I'll talk about mathematical concept. Okay, we talk about mathematical concept. So you take a short break now, 5 minutes. Don't go too long. 5 minutes break. Then I continue for another half an hour with you. I will finish by about 10:40 or 10:45 minutes. Take a short break. 5 minutes already. Let us come back. I just want to double check, see any question here. You got question, you please ask here. 139, 24 is here. I think still got a lot of students up here. Okay, let me continue. Next question 2, we are talking about maturity concept. What is a maturity concept? Maturity concept tells you how significant a piece of information will influence the decision making. Okay, maturity concept. When there's any omission, you forgot to record. Okay, or there's any misstatement, you record wrongly. Does it influence your decision making or not? You work for a multinational company, big company. You prepare 2 documents. So the first document is a statement account. The next statement is the report. The next document is the report. How would the consideration of maturity? Can you see that? Your exam question will be something like that. In theory, how would the consideration of maturity influence your preparation of this document? When I want to send the statement of account to the customer, I must list down the invoice price, 500 ringgit and 25 ringgit and 35 cents. Money received, 400 ringgit, 80 ringgit, 480 ringgit and 52 cents. The detail, a statement account, it must give you as detailed as possible, 100% up to dollar and cent. I cannot tell the customer, hey, you owe me about 500 ringgit. About 500 means what? Can be $498.35. It can be $508.05. You cannot be about, Statement account, the maturity concept applied here must be very accurate. Very accurate. But if I prepare the report, just give a rough figure will do. Okay, can you see that? The answer given to you here. Maturity is the fundamental concept, thus have a strict limitation, primarily to the financial reporting, but has no bearing on all detailed procedure. Statement to send to customer, it must be accurate to the last cent. You cannot say about 150. Okay, the bill is 147 means 147.5. You cannot say it's about 150. You cannot round it down to 145. It must be exactly 147.50 cents. So customer will agree on this price. This is agreed price. If you pay more, that means they give money away. Okay, if customer going to do that, it might be worthier beneficiary of the customer generosity. They are too generous. But if you are paying less, then to you, that's an unfair loss. They're paying less. They say, I no need 147, just pay 140. Then you lost 750 cents already. So this one must be accurate to the last cent. Accurate. On the other hand, when you prepare the performance in Malaysia and Thailand, then different consideration. Why? So this one you can round it up. Being accurate to the last cent, not necessary already, because the senior management interested in the broad picture. They want to see the big picture only. Do you want to tell the board, Malaysia we got 1,234,567.89, and Thailand got 1,023,456.78 dollars. You don't compare this detailed figure. You just round it out. This is 1.2 million. Do you see that? This is 1.2 million. Compared to Thailand, it is 1.0 million. 1.0 million. You got it? It's more easier. It's very much easier to understand. If you just tell 1.2 million and 1 million, it's easier to understand. So maturity concept allows you, okay, ignore the rounding difference. Okay, so but they are so small and the information is used for comparative purpose figure. As long as you can get 1.2 and 1, you know that Malaysia is better than Thailand already. It already hit the objective. So maturity concept allows you to just ignore the rounding difference. Clear? Illustration number 3, I just leave it because it's talking about the cost and the present value and the future value and so on. Okay, so done. I will go into the next. I'll go into the next. Property, plant, equipment. Okay, we got another 30 slides here. I'll cover about 15 enough, but I will cover all. This property, plant, equipment. Property, plant, equipment. If you look at the topics here, property, plant, equipment, you can see the first line is on the definition. Definition. Can you see that? Followed by recognition. Recognition is very important. Just now you watch a video clip, they tells you definition and recognition. Okay, then after recognition will be the measurement. Measurement got two. One is the measurement at the initial cost. The other one is called subsequent cost. The other one will be subsequent cost. Can you see that? Subsequent cost. Paragraph number 12. Subsequent cost. And here self-constructed asset. Okay, measurement subsequent to the initial measurement. So today I will just cover the first 15 slides here. That means you watch a video clip, the first 5 minutes. If you watch this video clip, do you see that in your video clip, IS number 16 is a 10 minutes video. So after the class, you watch this video, 10 minutes video, you can watch the first 5 minutes will do. The next 5 minutes is for the next week lecture. I'll continue. Okay, with the notes here. Okay, the notes here is quite lengthy. I just want to tell you that. Do you see that? They'll cover definition. They cover recognition. Definition means each individual item. What does it mean? Recognition means where I going to record and when I going to record. Where I going to record means you are going to record in SPL or SFE. You recognize an expenses or income. You recognize of asset, liability, equity. That's called recognition. And measurement got two. One is at initial recognition. The other one is after recognition. This is called measurement. Okay, I will cover the first one. Okay, then next week I'll cover revaluation. Then including derecognition. Then after that, the last topic will be disclosure. All accounting standard, you cannot run away. Definition, recognition, measurement, and disclosure. Yeah. So I want to start the standard now and to tell you that all accounting standard is the same. Refer to my this note. In the week number 5, I cover inventory. When I cover inventory, do you see that I got 4 topics? Definition, recognition, measurement, disclosure. Do you see that? Week number 4, intangible asset. Same thing also, I cover definition. Accounting treatment is a recognition and measurement. Whenever I say accounting treatment, it covers both recognition and measurement. Recognition means you want to record an SPL, you want to record an SSV. That is called recognition. Mana mau record dalam SPL, record dalam SSV. Bidder master for this year or for next year. That is called recognition. And measurement, how much? Measurement means how much. Okay, you refer to the chapter number 3 here, IS number 16. I cover definition. I cover disclosure. In the middle here, this will be recognition and measurement. These 4 items you cannot run away one. I continue. Can you see? Page number 6, IS 40, investment property, definition, recognition, measurement, and disclosure. IS number 10, definition and disclosure. Can you see that? Definition and disclosure. Accounting treatment cover recognition and measurement. How you calculate? Okay. Where are you going to record it? Same thing also. Provision, contingent liability, contingent asset. So when you do your revision, you make sure you cover these 4 areas. In the exam, they seldom test you on disclosure, but the first and second, third sure got one. You see income tax, definition, okay, then accounting treatment, then followed by disclosure. Revenue, definition, and your disclosure. This is accounting treatment. This is accounting treatment. Okay, all standard is the same. Introduction, definition, can you see that? And then finally disclosure. So all standard is the same. Okay, now come back to here. So we are going to look at the first one, the definition. Property, plant, equipment. If you look at your notes, you see student, you comment that I got PowerPoint slide, I got lecture notes, sometimes jump here and there, you're confused. But don't worry. After the class, you spend another half an hour, you just look through your notes, page number 1. Lecture 3 to lecture 8, page number 1. You can see these are the topics that we have covered. But you found that the first few pages is not relevant, it's a summary. You see that? So last year, your senior tell me that, why don't you delete all this one? This one all just duplicate only. I can delete it, but I give you the overall. So the accounting standard only start from this page number 4. It's not page number 1. Up there is all summary only. So you start from page number 4, MFRS, objective, the scope. And then you start from definition, paragraph number 6. Do you see paragraph number 6? Definition. You got definition, what's the carrying amount, what's the cost, what's the depreciable amount, what's the depreciation, what's the fair value, what's the impairment loss, what's the PPE. Okay, let me start from here. Later we are going to talk about recoverable amount, residual value, useful life, recognition. So today I will cover until recognition within this 10 to 15 minutes time like that. So what's the definition of the property, plant, equipment? Held by the entity for use. Remember the keyword is for use. For use, digunakan. Now, later on, when we cover this IAS 40, investment property. When we cover investment property, you don't turn your notes here and there, you just look at my slide here. Investment property, IAS 40, you buy the shop lot, you buy the factory building. You are not going to use it. You let it to other people, you collect rental. You collect rental. That is called investment property under IAS number 40. Today, we are under IAS number 16, property, plant, equipment. The definition is you must use it. You must use it. Kamu mesti menggunakan dia. Okay, you must use it. Held for use. For administrative purpose. For administrative purpose. You want to use it in the production or supplies of goods and services. Okay, you are going to use the machine. You're going to use a computer. You're going to use a lorry. You're going to use a van. You see, for administrative purpose. For production, that means the machine. The machine going to produce the product, the goods. The machine going to use to produce the product, the goods. You buy the computer, okay, it's supplying the services. Supplying services, the computer. Okay, table and chair. Give you the service. You can sit on the chair. You can put your document on the table. Okay, this is for production use and for administrative use. And it must be used for more than one accounting period. It must be used for one accounting period. You bought a machine, can last for year 1, year 2, year 3, year 4, then you recognize as a property, plant, equipment. These are the tangible assets, more than one item. Go back to your stationery just now. Your pencil, your pen, normally not more than 1 year. But I don't know, my pen, my pencil can last more than 1 year. I use it carefully. But for you use it, not sharp already, you use sharpener, then broken already, then you sharp again. So the lid broken again, you sharp again. So that's why a pencil cannot last for more than 1 year. I think now you never use this normal pencil already. You use this so-called mechanical pencil. Okay, you must use the lid. Okay, so in this case, your pencil, your eraser, even your ruler, it can be broken easily. Not more than 1 year. So that's why recognition of stationery as an expenses consumed within 1 year. it doesn't meet the definition of property, plant, and equipment. Clear? For the production, for the use. So you recognize as a property, plant, and equipment. There's one student asked me the question. That's why I said diploma student don't go into too detail. This student sent me WhatsApp. Teacher, how about the word for rental? To lend it out to other people's. If to lend it out to other people's, don't you say just now the IS number 40 property, plant, equipment now become investment property for rental. For rental. You see, it become investment property. But this rental is not so much on that. Okay, this rental is not so much on that. You see, if I'm a transport company, I buy lorry, I buy van, I'm going to use it in the supply of the goods, on the supply of the services. So that means I rent this lorry to this. I got my lorry driver, I got my van driver. So people need transport, I go and help them to carry goods. So that's why the lorry, the van is for rental purpose. Remember the leasing, we got another accounting standard, so accounting for lease. That's why I don't want to give example leasing. Last time without the lease, accounting standard for lease. So I got photoset machine, I got computer, I lease it to other people. That is my property, plant, and equipment. I use it to generate income. So that's called for rental. I give you another simple example. Grab driver. You know now the Grab e-hailing now very common, beside taxi. So I own the car. So this is my property, plant, and equipment. I use it, but I use it to carry passengers. So that's called for rental. But diploma student don't go until so detailed. The student asked me the question, I never answer. I hope they answer here. So students, you are very good at asking questions. As I say, some of the questions I don't answer because this is for the degree level. I don't answer you in the WhatsApp, but I answer you here. So if the student not satisfied again, please follow up. Okay. So in the diploma, we just want this keyword for use more than one accounting period. Enough already. That's the first definition of the property, plant, and equipment. Other definition, you can get it from here. Now, we go back to the next one. I got another 5 to 10 minutes. I hope that I can finish. The definition of property, plant, and equipment, it must have for use more than one accounting period. Definition, look at here. What is the cost? Cost is 500 ringgit. It's a cash of cash equivalent paid, or the fair value. Why? It's a cash of cash equivalent. It can be cash, it can be check. Then you pay, or fair value of the consideration, the price, to acquire an asset at the time of acquisition or construction. Why I say like that? Why there's a fair value? Listen here. Listen here. I give you one example. I got a house in Taman Bunga Raya. For example, I got a house. You know Taman Bunga Raya, the house very small, only 500,000. Or you don't like Taman Bunga Raya, just say PV Platinum Victoria. You those who stay in PV. I think the apartment easily cost 400,000. For example, 400,000. I got this apartment 400,000. Now I don't want. I want to retire. I want to go back to Kampong. And happen that you are staying in Pahang. Sorry, those people come from Pahang. I'm not saying that you are very rude. In Pahang, you got one dusun durian, 1 acre. You know, the durian farm, very big one, Okay, but you don't want to stay in Pahang because why? You want to come to TAUC to study, So you are willing to give me the piece of land in Pahang, very big piece of land, some of the durian, and you are willing to give it to me to exchange with me 1 apartment, 400,000 in behind the TAUC. That's why that's called fair value. Fair value given to acquire asset. So at this moment of time, you see, for me, because my objective, I want to retire, I want to go to Pahang, stay inside your this durian farm, very big land. And for you, you don't want this big durian farm. You want to come to PV because you want to stay there and study in TAUC. That's why we got this fair value. In diploma, if you don't go to here, we straight away go to the cash that you pay. 500,000, for example. Residual value will be the scrap value. I think yesterday I discussed, a lot of students cannot understand, but I think today I tell you this is scrap value. That means after the end of the useful life, can you see that? At the end of the useful life, it can be sold for 50,000. So depreciable amount will be the cost minus residual value. And depreciation will be the matching concept. Now, let me show you this formula. Otherwise, you start confused already. Let me show you this one. Okay, if I got an asset machine, 500,000. I got a machine, 500,000. Residual value is equal to scrap value. I hope that you know residual value is called scrap value. Scrap value is at the end of the useful life, you still can sell for 50. Okay? So in this case, 50 minus 500 minus 50 is called depreciable amount. Depreciable amount will be 500 minus 50 equal to 450. Okay? This depreciable amount 450 over 10 years. Over 10 years. So your matching concept come in. Your matching concept come in saying that depreciation will be equal to 450 divided by 10 years equal to 45. So until here, can you understand? Cost is the original price. Cost is original price. Residual value is end of the useful life, you can sell for 50. So within these 10 years, you're going to lose 450. This is called depreciable amount. Amount yang boleh disusun-nilaikan over the 10 years. So each year will be 45. Now you get the matching concept already, depreciation. So far so good. You get these 4 definitions done. Next, useful life. How long the asset is expected to use? The period. Again, in the diploma level, we cover only the period. In the degree, you may be number of production. Okay? And what's the carrying amount? Carrying amount is the asset record in the statement of financial position. So now, what's the carrying amount? Carrying value will be equal to cost 500 minus depreciation 50 equal to 450 in year 1. In year 1, this is called carrying amount. So in year 2, cost 500 minus accumulated depreciation 100. Then it will be equal to 400. This is called book value or carrying value. So carrying value will be the cost minus depreciation. Okay, in year 3, your cost is still 500, but you minus accumulated depreciation 150, now equal to 350. This is again is a book value or called carrying value. So I give you 3 examples here. I hope that you can understand what's the carrying value. Carrying value actually is a book value. This carrying value is the amount recorded in the statement of financial position. Are you okay? Come back here. Carrying amount. The next one. Fair value. Fair value is the amount for which asset could be exchanged between the knowledgeable willing party. Knowledgeable means I know, you also know. Willing party, I'm willing to sell my land, my PV, you are willing to sell your piece of land in Pahang. In an arm's length transaction, you are not my son, you are not my daughter. You are not my uncle, my auntie's son or daughter. We got no relationship. There's no related party transaction. That is called arm's length transaction. Fair value. And this fair value more towards the land and the building. Fair value and the net selling price is the same meaning, but this one will be more for the inventory. Can you see the definition is the same? The price that you can obtain from the sales of the asset in an arm's length transaction within knowledgeable bidding party minus any transaction cost. Okay, fair value is more for the land and building. Net selling price will be more for other assets. Now this one very difficult to understand. Value in use. I bought a machine in the first year. After year 1 is 450. After year 2 is 400. After end of year 3 is 350. So the asset can last for another 2 more years. Assume that another 2 more years. Another 2 more years. Value in use is the present value estimated future cash flow from the continued using. Listen here. The machine already used in the year 1, in the year 2, in the year 3. I assume that in the year 4, in the year 5, how much cash I can generate in year 4, how much cash I can generate in year 5, discount it to today's price. Plus, at disposal at the end of the useful life, end of year 5, if I sell the asset, discount it to today's value, how much is worth it? That is called value in use. Okay? IAS 36, I will cover this again, don't worry. You may not be able to understand. Now, recoverable amount. Do you see this now? Today, net selling price, year 1, year 2, year 3, I got 2 decisions. Decision number 1, I want to sell it now. How much is worth it? 320, for example. You see, in the year 3, cost minus 150 equal to 350. Book value, 350. But in real life, this one may not be enough. So today, someone offered me 320. That means immediately I lost 30 already. Can you see that? Because my book value should be 350. Net selling price is today I want to stop my business. Going concern no longer at price. Somebody offer me 320. Should I sell or not? I don't know. Then I ask expert. Expert calculate for me. Value in use, if you continue to use it in the year 4, in the year 5, how much cash you can generate? Discount it to today's price. Plus, end of the year 5, you sell the asset. How much cash you receive? Discount to today's price. This figure add up together 330. Right? Do you think I want to sell now? I don't sell. Because if I continue to use it, I will get higher. I'll get higher. That is called recoverable amount. If I can get 3 cents, then I better sell it now. 330, 320. Okay, instead of wait until 2 years later, I get 3 cents only. So recoverable amount, I choose a higher figure. And next week lecture, I'll cover what's impairment loss. If my carrying amount 350 more than the recoverable amount, that is impairment loss. You don't worry, I know that you're confused. I will continue, okay, in the IAS 36 later on. This topic will be duplicate. So next one is on the recognition. Can you see that the keyword is probable future economic benefit? I remember I told you that change the word probable to potential. Potential future economic benefit throw into the entity. And it must be able to measure. Then you can recognize as an asset already. That is called recognition. And measurement always recognize the cost. What's the cost? Paragraph number 16. You read the standard later on after the class. It must be number 1, the purchase price. Number 2, any cost incurred directly to bring the asset to the present location and condition. Number 3, initial estimate of the dismantling. After 10 years, I don't want the building, demolish it. How much is the cost incurred? You add up together. Now, what is directly attributable cost is given in the example here. Employee benefit including salary, prepare the site, delivery and handling the cost of the machine from the part crank to the warehouse, installation, testing, professional fees. These are called directly attributable cost. Clear? Then this is the format, how you calculate the cost of asset. And this one exchange I mentioned about the Taman Raya or the PV to change a piece of land from you in Pahang. Yeah? Subsequent cost is more on repair, maintenance, or major renovation. I'll cover in the next week lecture. So I want you to study until here. Then next week, I will go into the revision. Of course, before I start, I will go back to the revision a short while, then I cover this revision. Look at here. If you refer to this lecture, notes number 3 to 8, you have to cover until paragraph 28. You cover until paragraph 28. So next week, I'll focus on this revision. But before I start this revision, don't worry, I'll go back to this 28. Because why? remember that I mentioned about the cost. What's the cost recognition? Okay, initial cost, what does it mean? And measurement cost, what are element cost? Remember the paragraph 16? Paragraph 16 tells you that purchase price, directly attributable cost, initial estimate. This one next week I'll cover. Okay, I'll go through. You read first, you read until paragraph 28. You read until paragraph 28. Okay. For the moment, after the class, you read until paragraph 28. Then next week I'll just continue. Okay, so I'll continue for the PPE. Any other question you want to ask up to here now? I don't drag too long, and I must reserve a little time for you to ask questions. Okay. Tell your friends who are not here, attending lectures is very important. So if no question, I think I'll stop here. Let me know any changes because next week Monday is public holiday. Your class is not affected. Okay, bear in mind if there's any public holiday, you need to do replacement. Okay, if no question now, we can leave the class already. Thank you very much. I'll stop here for today. Okay, you may leave the class now. Thank you very much. Okay, thank you. Welcome. Bye-bye. Okay, bye-bye. Thank you. Welcome. There's still 18 people in the live stream. Okay, thank you. Welcome. Bye-bye. Okay, bye-bye. Welcome. Okay, if no question, I'm going to leave the classroom here. Those in the live stream, do you still have any questions to ask? Otherwise, I'm going to stop. Still got 11 there. Yes, still got 16. Yeah, I'm going to shut down now.